and we're joined by Westpac senior economist James Shugg. James, what are we looking for here? What is it going to be telling us as to where we are in the recovery path?
Well, it's going to be a bit of a difficult one, of course, because there are some special factors at play that might mean we don't get a true sort of underlying read, for example, on the retail sales numbers. You know, the weather clearly had a big impact on payrolls in the month of February, but did it impact on retailing? If you look at the partial indicators for retailing, like weekly...
You couldn't get to the shops, could you, some of these people?
Yes, but there's internet stuff in there, yeah, and maybe people went to the shops when the weather cleared up and stocked up big time. Because if you look at the weekly chain store sales figures, they were very volatile in the month. Some very sharp dips, but some very big bounces as well. And at the end of February, the trend, if anything, was to the upside. So it may be that the weather effect wasn't as big as some are anticipating. I've got to say, in January, we forecast a big negative on retail sales because of the snow they had back then, and we were wrong. So once bitten, twice shy, and that's why we're actually only looking for a sort of a flat retail picture in February rather than a negative.
We've got the Toyota effect also to be watching out for here.
Yes, but how did that impact on other auto manufacturers? Did they lift their prices because Toyota suddenly disappeared from the market in the early part of February? We don't know yet for sure. We know that unit auto sales fell in February, but that doesn't automatically translate into weaker car sales in the retail sales report. Our view is it probably was a bit of a drag from autos, but we'll have to wait and see on that one.
OK, let's do the consumer sentiment report out. You're at the bottom of the pile as far as that goes. You don't think there's quite the bounce that perhaps consumers
I can't understand why the consensus is for a small rise. Look at February conference board confidence. It fell very sharply. If you look at the ABC weekly confidence indicator, since the start of this year, it's fallen very sharply. At the start of this week, the IBD TIPP Economic Optimism Index fell to a one-year low. You know, every indicator that we look at that tells us about confidence suggests that the Michigan numbers should fall. I mean, what I would say, it's only a survey of 300 people. 1 in a million Americans get surveyed for this preliminary result. So it's not always an accurate guide to what's going on. But if it is accurate, we think it should show downside today.
Right. Let's take a step back and say, where are we? When do interest rates start going up? Do we have any inflation on the horizon as far as the US economy goes? Do we stay extraordinarily low interest rate in this extraordinarily low interest rate environment?
How often do you get a negative core CPI? Once in a generation, and we had one in January. That's an indication that the output gap in the US at the end of 2009 was incredibly wide. We estimate about 6 percentage points of GDP. Even with growth continuing through this year, we think it's going to be a bit more subdued in the second half than in the first half. The output gap's going to be still very wide. The Fed doesn't need to do anything on policy this year. Inflation is not going to be an issue. Next year, they'll probably take the emergency component of easing out, maybe a lift to 2%, but you're not going to see rates much beyond 2% until after 2011.
Right, so what sort of growth can we expect over the course of 2010? OK.
We're looking for growth to probably about half the pace it was in the fourth quarter, in the first quarter. We're already getting monthly data telling us that inventories aren't going to repeat that 4 percentage points contribution to GDP growth. Fiscal stimulus is starting to unwind. The housing market, look at the housing figures. They're turning very soft, even with the extension of the tax credit. That seems to be losing momentum. And inventory rebuilding, I mentioned that. Fiscal stimulus unwinding. By the middle of this year, growth's going to be closer to zero than the 6% annualised we saw at the end of last year. So full-year growth just above 2.
Right, Janet Yellen, possibly number 2 in the Fed.
Great choice.
Why?
She knows Washington politics. She's a good economist. She's married to a Nobel Prize-winning economist. Been a big fan of her for a long time. She's kind of Bernanke's sort of earpiece, I think, too. So she's got some close links to him. It'll mean a smooth operation at the top of the Fed. Great call.